Assalamualaikum and selamat sejahtera. My name is AZRAN SYAZWI bin ABDURAHMAN and my matrix number is BB211100720. I would like to present about question 7, which is the inventions of the computer is the major factor behind the decline of the banking industry. Is this statement true, false, or uncertain? Explain your answer. So the answer would be, this statement is uncertain. A computer is a modern invention that is constantly evolving. The computer was a recent innovation that has now permeated daily life. The assumption that computer innovation is the primary factor contributing to the decline of the banking industry is uncertain. This is due to the fact that the development of computers must have boost transaction speed and decrease transaction costs, which have aided banks in processing transactions more quickly and enhance competition in the banking sector as a whole. However, this also aided non-banking financial organizations in attracting away consumers from the banking sector, which means that banks must have seen a decline in their revenue and customer. Aside from that, development of the computer is a major in the decline of the banking industry. For example, securitization, a process that turns illiquid financial assets like bank loan and mortgages into marketable securities that can be freely bought and sold, allows for the transformation of a variety of illiquid financial assets, including mortgages and loans from banks into liquid financial asset class. Second, the ability to assess credit risk using statistical method provided by computers allow other financial institutions to provide loans. Banks lost their competitive advantage in lending when failure risk can be quickly assessed by computers. Thirdly, the ability to bundle and sell these loans as securities has been made possible by the reduction of the transaction costs brought on by computers. As a result, while participating in the securitization process themselves, banks have lost loan business to other financial organizations without their early benefit. In conclusion, it's not entirely incorrect, but it's also not entirely correct to say that the development of computers is a major role in the decline of the banking industry. That's all for me. Thank you.
Hi everyone, my name is ELVINA ELIMA. So now I will present question 9 answer. So the question is, how do sweep accounts and money market mutual funds allow banks to avoid reserve requirements? First of all, we go to the definition of sweep account. So the definition is, sweep account is a bank or brokerage account, and it will transfer funds that exceed or fall short of a specific threshold into a better interest earning investment alternative. Although currency market shared reserves operate as profit-generating financial record storage units, they are not subject to hold requirements or restrictions on premium payment because they are not legally kept. Organizations with clear records are able to clean away any modification exceeding a certain amount from their financial records and place that money in temporary insurance policies that generate income. These reserves that have been cleaned out are not designated as checkable stores, protecting them from holding necessities. And in conclusion, these two financial changes made it possible for banks to avoid holding requirements moving forward. Although these accounts act as interest-bearing deposits, they are not technically deposits and are therefore exempt from reserve requirements. And that's all from me. Let us move to the next presenter. Thank you.
Hello, I am RATNASARI binti Abdul Tahib and my matrix number is BB211100236, and I will continue with question number 13. Why have banks been losing income advantages on their assets in recent years? A bank is a financial institution that accepts deposits from the public and creates demands deposit while simultaneously making loans. Banks earn profits from the difference between costs including interest payments for drawing and servicing deposit and income received through interest charged to borrowers or earned through securities. There are four major categories of banks, namely retail banks, corporate or commercial banks, investment banks, and central banks. Banks have been losing income advantages on their assets in recent years due to securitization. By removing some of the risk from lending, securitization has enabled other financial institutions to originate loans. When other financial institutions participate in this industry, the bank's assets are depleted and the bank has lost money. Next, commercial paper and bonds are often the means sought by subsidized businesses. This is because the development of the commercial paper market and the growth of the bond market have provided companies with an alternative to borrowing from banks, thereby affecting the bank's competitive advantage in lending. Okay, the last is banks lose their earnings advantage on assets also due to innovation. This is because innovation has been used to divert loans from traditional banking, and as a result, banks are losing market share. Increasing information innovation has made it easier for companies to issue securities directly to investors. As a result, customers are more interested in applying for commercial paper to make loans than going to banks for their short-term credit needs.
Question 21. What factors explain the rapid growth of international banking? Factors that resulted in rapid growth in international banking is technology advance. Technology advance enhanced the effect of economic integration and connectivity on international banking. Advances in telecommunication and technology have increased the development of economic and statistical models by improving data accessibility on borrowers' guarantee and collateral characteristics. These paved the way for greater access to bank credit, new form of securities, and enhancement in risk management, and it offset the cost of doing business in faraway location from head office. Technology advance related to telecommunication and data processing have stimulated financial innovation and creativity that have changed bank service or financial procedures. Retail loan applications are now assessed using credit scoring tools rather than relying on human judgment, such as PICO score that is a well-known method of measurement in Malaysia. The nature and scope of international banking business have changed as a result of technology advance, which it enables bank greater market reach and new business areas. Also, enables bank to book asset, manage operation, and automate procedures in integrated manner across the global supply chain.
Assalamualaikum and hello everyone. My name is RASHID bin ABDURAHMAN with major number BB21110286. For the next part of the presentation, I'll be explaining about the factors that explain the rapid growth of international banking. So one of the major factors to the development of international banking is the low marginal cost of doing business. So a marginal cost that is significantly low in value can help to boost more services that can be provided by the international banking towards its customers and players. So knowledge about margin and marketing in one's own nation may be applied profitably in another country at a low marginal cost. So when a corporation is aware of both the marginal cost and the marginal revenue associated with its different product lines, so it is able to direct its resources towards products that provide the largest marginal profit. So it is possible for it to emphasize from investing in products that have only moderate success to producing individual units that provide the highest possible profits. So by that, the firms or business can have more profits to be taken from the producing process. So and low marginal value and low marginal cost also can help to investigate the good characteristics of the new place as well as possible opportunities to learn more. Effective management and strategies that, when applied to a bank, will help it expand its operations into the market at minimal incremental cost will have a significant impact on the development of international banking.
Assalamualaikum and hi, my name is Siti RUMIZA binti Salleh, matrix number BB2111066. Today I will be presenting question 17 from Economic Analysis and Financial Regulation, which is how can the existence of asymmetric information provide a rationale for government regulation of financial market? When one side to an economic transaction has better knowledge than the other parties, a situation known as asymmetric information or information failure exists. Asymmetries in information are present in almost all types of economic interaction. In certain transactions between a buyer and a seller, there is asymmetric information which creates the possibility for one side to get an edge over the others. Asymmetric information which refer to the fact that such different parties in financial transactions do not have the same knowledge, may lead to issues such as adverse selection and moral hazard, both of which have significant effect on our nation's monetary system. Because they provide private loans, financial intermediaries such as banks are particularly well adapted to tackling adverse selection and moral hazard concerns. However, because depositor lacks knowledge of the quality of these private loans, this solution to the free rider problem generates another asymmetric information problem. This asymmetric information problem causes various issues that impact with the correct operation of the financial system. A bank failure when a bank is unable to meet its obligation to pay depositors and other creditors and therefore go out of business meant that depositors will have to wait until the bank was liquidated before receiving their deposit fund. They will be only paid only a fraction of the value of their own deposit. Depositors will be hesitant to place money in bank because they will know whether the bank management were taking on too much risk of blatant crooks, which will make banking institution less sustainable. Second, depositor lack of knowledge because of the quality of the bank assets might cause a bank panic, which have substantial and negative effect on the economy because the simultaneous failure of multiple banks lead to dramatic reduction in bank lending. Depositors are unable to identify whether their bank is a good bank or the bank on the 5% that are bankrupt due to asymmetric information. Depositors at both poor and reputable banks understand that they may not receive 100% on their dollar for their deposit and hence more likely to withdraw them. A government safety net for depositors can prevent bank runs and bank panics. By offering depositor security, it can overcome depositor reluctance to put cash in the banking system. And this is all for me. Thank you.
Hi, my name is FAIZAL bin Mazlan and my matrix number is BB2110740. So my question is, the more collateral there is backing a loan, the less the lender has to worry about adverse selection. Is that statement true, false or uncertain? Explain your answer. So my answer is this: the statement is true. First at all, we need to know what is collateral. Collateral in the financial word is valuable asset that a borrower pledge a security for a loan. When a home buyer obtains a mortgage, the home serves as the collateral for the loan. For a car loan, the vehicle is the collateral. A business that obtains financing from a bank may pledge valuable equipment or real estate owned by the business as collateral for the loan. A loan is secured by collateral comes with a lower interest rate than an unsecured loan. In the event of a default, the lender can seize the collateral and sell it to recoup the loss. Before granting you a loan, a lender will want to verify that you can repay it. As a result, many of them demand some kind of security. This security is known as a collateral, and it reduces the risk for lenders. It aids in ensuring that the borrower meet their financial obligation. If the borrower defaults, The lender can seize the collateral and sell it, attributing the proceed to the unpaid amount of the loan. To reclaim any leftover balance, the lender may opt to take a legal against the borrower. As mentioned above, collateral can take many forms. It normally relates to the nature of the loan. So a mortgage is collateralized by the home, while the collateral for a car loan is the vehicle in question. Other non-specific personal loan can be collateralized by other assets. Loans secured by a collateral often have far lower interest rate than unsecured loan. A client is a legal right or claim on an asset to satisfy a debt that a lender has on collateral of a borrower. The borrower has a compelling motivation to repay the loan on time, because if they do not, they risk losing their home or collateralized asset. So this statement is true. When an individual has a lot of collateral on a loan, the more will act in the lender's favor because he has much at risk. A risk too. A collateral is an asset that is used as security to back a loan. If the borrower default, they are at risk of losing the collateral. When more collateral is used to back a loan, it would be riskier for the borrower to default. They are more likely to behave in favor of the lender.